Despite the weakening of steel prices, the steel sector saw a remarked improvement in profits. The Chinese steelmakers earned 46.3 billion yuan in the first half, as against the losses of 310 million yuan during the same period last year. So the recovery in the steel sector's profits is largely thanks to steeper price declines of steel-making raw materials than finished steel prices. Specifically, coking coal and coke led the decline, with coking coal dropped by more than 20% compared to the beginning of the year, and the coke down by even larger, more than 30%. Iron ore prices declined by 9%, and the steel scrap also down by 9.2%. So iron ore prices remain the most resilient among all steel-making raw materials.
Even though we all know that on Friday last week, the DC actually started to intervene the position, especially for the long position held by the traders. There is a quite deep pullback for the price of the coking coal. But if we look at the valuation from the fundamental perspective alone, we can see that there is still a gap here, which means that based on current inventory of the coking coal, the price of the coking coal can continue to move upward. So if you ask me the question, if it's only a temporary pullback, or does it mean that in the second half of the year, the price of the coking coal is going to continuously moving downward, I think it's more of a temporary pullback.
So for the second half of this year, as for the expectations for the direct export market for steel in China, we think that if there are subsequent production limit policies for steel, which means there will be a shortage in the domestic steel market, then the direct steel export will decline for sure. If there are no production limits policies, then the export costs will serve as an upper pressure for the level on the steel prices for China, especially for HRC. So this is our basic outlook for the steel prices for the second half of this year.
How do you assess the latest trade tension situation between China and the US and the prospects for China's steel exports? What is the price outlook for 62% iron ore in the second half and the spread between high grade and low grade? What are some trading opportunities for steel in the second half this year?
So at the moment, all eyes are on the ongoing new round of
for the price trend of the iron ore, so for example, in the SGX market. So
I will give two scenarios for this question.